We have big banks predicting that rates are going to cut by the end of 2023. And we can see Commonwealth Bank is tipping that the cash rate will reduce starting late 2023, and Westpac and ANZ are saying mid-2024. So today we're going to look at, is this fact or fiction? And more importantly, why is it that the predictions are changing? And how is it that rates will reduce? What other factors are at play? So stay tuned. So beginning overseas, and let's look at what's happening in America. At the moment, we can see that for 2 consecutive quarters, that the gross domestic product, or the GDP, has been negative. And this is very important because the GDP is a measure of the change in inflated adjusted value of goods and services produced by an economy, and is a measure of an economy's health. Over time, we expect economies to expand and produce more goods. But there are cycles, and businesses do go through downfalls. In these times, it means that there's job losses and an increase of unemployment. Now, there's no single definition of what a recession is, but it's generally agreed that a recession occurs when there's a period of reduced output and an increase in unemployment. Now, there's a terminology that media use a lot, and it's called a technical recession. And this is where there's 2 consecutive quarters of negative growth in real GDP. Now, going back to America, we can see that that is definitely looking like it's on track. But there is a caveat. Keep in mind that this is an advanced prediction, with the GDP being published monthly in terms of the figures. There's 3 versions of the GDP, and they're released as either advanced, second, or final. Both the advanced and second releases are preliminary. So they're initial readings, but we can definitely see that there are warning signs here for America. That then means that because of this potential technical recession, that there's already changes in what they're expecting the Fed to do. And Eric Nielsen, who's a global chief economist at UniCredit, said that, can you really expect rates to rise into a recession even if inflation is high? That would be unusual. And Bank of America backed this up, saying that their economists are expecting the Fed to cut rates by September 2023, and that's to fight a mild recession. Now, the Fed's our equivalent of the Reserve Bank of Australia. There are some pundits that are saying that there's a huge correlation between Australia and the US interest rates, but here's the thing, that's not always the case. So more importantly, let's bring it back to Australia and see what is likely to happen in Australia and why the rates have been predicted to decrease. Going to the Reserve Bank, and we need to know what their whole goal is. Their sole goal is really the stability of the currency, unemployment to be low, and economic prosperity. And their primary instrument is the cash rate. That's the Reserve Bank's interest rate, where they will increase or decrease it. As a result, will flow into the market. They do have other tools, but this is their primary. The reasons that they do increase the cash flow is if inflation's out of control, there's a high unemployment, or if the economy is slowing down. And we saw that in the pandemic, where stimulus was produced to ensure that the economy would continue to grow. With Australia, it actually looks like we're moving into peak inflation, which is really good news, because if peak inflation occurs, it means that when we go back to why the Reserve Bank increases the cash rate, we can see that the 3 main items are either inflation, employment, or economic growth. The biggest issue at the moment is actually inflation, which the Reserve Bank's target is between 2 and 3%, and at the moment we're completely over that mark. So if inflation were to peak, it would take a lot of pressure off the Reserve Bank of Australia and allow them not to continue to increase their cash rate. With ANZ senior economists saying it looks like we're moving past the peak in quarterly inflation, that the drop in crude oil and the drop in global food prices suggests that inflation will peak before long. And this is backed up by another economist by the name of Angela Jackson, who says that if inflation is happening in the services sector, that it means that it'll be embedded in terms of wage and delivery services. But she says that the factors coming from goods is good news, because it means that a lot of it comes from the overseas supply blockages and supply chain issues. Allowing the international factors to resolve themselves will help remove the pressure off the Reserve Bank of Australia and allowing them to not aggressively continue to raise interest rates. And it was only in 2008, where the global financial crisis happened, that Reserve Bank actually mistakenly hiked rates by 1%. After the economy slowed down and ground to a halt, the RBA were forced into a sharp reversal where they slashed rates by 4% over the next 6 months. And once again, if a recession were to happen in America, we would expect that these lessons from 2008 would come through. So even if Australia is going really well, inflation is under control, we would expect them to take the lessons from 2008 and not increase rates. And finally, the ASX 30-day interbank cash rate futures forecast expects, and we can see here, that rates will begin to decrease in August of next year and supports the predictions. And there are a number of factors why the rates will reduce. A lot of it comes down to peak inflation, but also what's happening overseas. If America were to go into a recession, they'll look to start to decrease rates. And with Australia, we would expect them to either stay on hold or reduce them. More importantly, back to the Reserve Bank of Australia, their three main key issues are inflation, employment, economic growth. At the moment, the only thing that's out of whack is the inflation. So the moment that comes back in line, we can expect that the rates will either maintain on hold or reduce. Here at Hunter Galloway, we get home loans approved. So if you live in Australia and looking for a great mortgage broker, we can help. Visit us online at huntergalloway.com.au or call us on 1300 088 065. We help Australia-wide and don't charge a fee for our service. So reach out. We'd love to help. And until next time, I'll catch you then.